Hi there, everyone. Pleasure to be here. What we are going to do is try to talk about the future of the dollar, currencies, the monetary order, all of these things in about 25 minutes and keep it very entertaining. So one of the extraordinary advantages the United States has is that the dollar is the reserve currency of the world. It allows the United States to borrow on a scale and with low interest rates in a way that almost no other country can do. And one of the many things that has been called into question because of, let us say, the events of the last few weeks is what happens to the future of the dollar. And so, I want to start by posing that question. There is a view that no matter how many mistakes we make in Washington, at the end of the day, you can't beat something with nothing, and the U.S. has, and the dollar has these extraordinary advantages. Europe has a currency that is held together by committee, and who knows whether that goes on forever. China has a currency that is essentially closed to the world. Japan has a currency that is tethered to an economy that is in slow but steady decline because of its demographics. So as Larry Summers likes to put it, the former Treasury Secretary, as long as the dollar will be secure for the future, as long as Europe remains a museum, Japan remains a retirement community, and China remains a prison. So I guess I begin by asking you, Ray, do the events of the last few weeks, do they have the effect of threatening the role of the dollar? Because so much of what the dollar is based on is a kind of trust, and currencies are based on trust. So how do you think about what's happened over the last few weeks?
You asked me to be entertaining. I think I could be more thrilling than comedic. I think you have to, I think the punchline is, I think we're in the breakdown of the monetary system, and that none of those currencies are going to be viable currencies, because a currency is a medium of exchange or a storehold of wealth. And as a storehold of wealth, we have a debt problem. That there's been, to store currency, you hold it in debt instruments. And so we have bonds. And we have a supply-demand problem with bonds. This isn't just an American problem. This is a European problem. This is a Japanese problem. It's a Chinese problem. And so now, for example, there's our debt to GDP for the government is the highest ever, $1 trillion a year we have to spend on interest expenses and the like. And we now are going to have to sell about an amount equivalent to about 7% of GDP, and there simply will not be an adequate demand for that. And that's a chronic problem. We're living also in a world of a great internal conflict. So we're breaking down the monetary order at the same time as we're breaking down the domestic, social, and political order. What's happening now is a new order domestically. And internationally, we're breaking down the international order from a multilateral order to a unilateral order with great conflict. So I think the question is going to be the supply-demand. What you've seen over this recent period is just the symptoms of that. So when we deal with trade deficits, let's say, we have a problem, a fundamental problem, that the dynamic has been that we don't produce things well. And China's a big manufacturer. And the dynamic has been that the Chinese lend us money to buy their goods. We get deeper in debt and we lose manufacturing. And so that is not sustainable. We're at a point that that's not sustainable. And because that's not sustainable, in a geopolitical world which is threatening, we cannot be reliant on manufactured goods in China. And they cannot rely on us to give them the payments in terms of that. So that means that these tariffs and these imbalances have to shrink, and that's what we're seeing. So tariffs are only a symptom of the underlying monetary problem. And I don't think it's going to be, as I say, any of those currencies. I think the question is, what is money? What is going to be a storehold of wealth that is exchangeable internationally, recognized internationally? And so I think we're coming into another world. That's why gold has been strong, by the way. Central banks are selling dollar assets, dollar-denominated assets, and are buying gold. It's the third largest reserve currency. But there's the nature of that dynamic.
But let me ask you, Ray, there does seem to be something different about this last few weeks. If I compare this period to the 08-09 financial crisis, huge breakdown of the global financial system, largely caused and created in the United States by American financial institutions, epicenter of the crisis in the United States. And yet, the world rallied to buy American debt at that point. American treasuries were the store of value, were the place where everybody went for safety. Today, what's happening, because the crisis was created in Washington by the president, you have, for the first time in my living memory, the stock market goes down, the bond market goes down, the dollar goes down. It seems like people are fleeing the dollar, fleeing dollar-denominated assets. It's a sort of vote of no confidence in the United States.
This has happened many times in history. This is very similar to the 1971 period. What you're seeing reflected in the market action that you're talking about is the selling of dollars. So what you're seeing, it's reflected in long rates rising relative to short rates, the yield curve becoming more positively sloped, at the same time as the currency's going down. Without a change in the supply, we haven't changed the supply. So when you see bonds going down and the currency going down, and you see gold going up, it's a reflection of the selling of those bonds and the selling of dollars. Very similar to the 1971 period. This has happened many, many times, that market action. That's what we're seeing.
So, Jeremy, let me ask you, one of the big new features, even compared to 08-09, is technology. And people say, yes, you have a transformation of the monetary system, and it's going to be because of these new technologies, and you're going to have new currencies that are technologically empowered using the blockchain, Bitcoin being the most famous. You run one of the most important crypto firms that does stable coins, which, just to explain to everybody, are cryptocurrencies, but backed one-to-one in the case of Circle with the dollar. So this is not putting your faith in an algorithm. This is, at the end of the day, you're putting your faith in the dollar, but using technology. So when you look at this, what does it look like to you the future of the dollar is going to be?
Well, I agree with Ray. I mean, this is a period of significant turmoil in the international monetary system. And in some ways, that turmoil did actually start after the great financial crisis and really, I think, in some respects, led people like myself and others to think, is there a better construct to build a system of economic value exchange and how money and the financial system can work? And that ultimately led us to this idea that what if we could have a safer form of money on the internet, in some ways safer than bank money, where you took essentially the obligations of a government, which are maybe in question, debt obligations like treasury bonds, and government kind of obligated money, and then issue that as a digital currency that inherited all the features of the internet. So we sort of have these internet superpowers, the ability to move information and data and communications instantly globally at no cost, to distribute software at no cost. So what if we could have a protocol for dollars on the internet, that it was a safer form of money that could then effectively enable higher utility for dollars and expand its use around the world. And so what's really ended up happening is, through platforms and networks and products like USDC, we've seen this extraordinary growth in these digital dollars. And what's interesting is that people around the world want them. There's an enormous amount of demand for people who want to hold digital dollars, both because they're seen as a stronger alternative to oftentimes even worse fiscal and monetary issues in their own countries and regimes, but of their extremely high utility. And so there is a currency competition that is both about indebtedness of the countries and or trade imbalances, but there's also a currency competition, which is a technological competition. China's chosen to try and run an entire end-to-end government-run system. The United States, through, I think, positive work, through work such as the senators establishing legal regimes for the private sector to lead and drive this technological innovation. And that is effectively establishing a model where digital dollars become a massive export of the U.S. system, and technology pervades this as ubiquitously as WhatsApp has pervaded, and communications and internet technology services from great American companies have pervaded the world. We believe that we can help distribute digital dollars globally and actually create ongoing demand for U.S. Treasury bonds as well, creating a safe instrument that's there. Now, this is sort of, you could pick your time frame as to like how long is this going to be the monetary order, and I think as Ray and I were talking about beforehand, right, these arcs are multi-decade arcs, and sort of what the system looks like 10 years from now or 20 years from now is absolutely going to look very different. But right now, the United States needs to improve the competitiveness and demand for dollars. It needs to improve the technology competitiveness, and stablecoins as a new form of money, a new money layer on the internet, is a tremendous opportunity to continue to drive the influence of the dollar economic system.
So you're saying that using this technology, you could imagine a situation where the dollar actually becomes more central to the workings
Yeah,
of
I
the
mean, these currencies are network effect businesses, and so the denomination is both because people want to hold the debt, but it's also because there is this network effect.
Because everybody else
hold
is
it,
using
people
it.
will settle in it, et cetera. And so money is a network effect business, and stablecoin money is a very much a network effect business. We've sort of seen this incredible growth in transactions that are happening with this, and we're now in a world where you can store and transmit digital dollars to any counterparty anywhere in the world on any device and any piece of software, hardware, or an AI agent. Pick your interface in a fraction of a second at a fraction of a cent. That's never been possible before, and you can now write contracts in code that intermediate that value exchange in highly sophisticated ways that will allow you to kind of reconstruct commerce and financial constructs on this machine-powered, software-powered internet. And that's a huge breakthrough, and I think it will dramatically increase the utility of dollars in the world.
Senator, you've been a leader on some of these issues. So when you hear this conversation, what are your reactions?
So I agree with what you just said in terms of the opportunities ahead of us. But we need this market to be regulated, because the United States and New York specifically is the center of the world financial markets. It has been, and we would like it always to be. But one of the challenges is cryptocurrency, blockchain is not regulated today. There's no rules of the road. And so I was a former securities lawyer for over a decade here in New York City. I understand financial regulations, I understand securities law, I understand commodities laws, and what Congress must do is get their head out of the sand and do the work to regulate this industry so that we can continue to be the center of the world financial markets. The use of cryptocurrency, the use of blockchain, the use of stablecoins as a digital asset is worldwide. And if you want to have that system function well, to have safety and soundness, to have transparency and accountability, to have consumer protections, to have anti-money laundering, to have anti-illicit finance aspects, you have to create a regulatory framework. And so what I've been working with my colleagues in Congress across the aisle on a bipartisan basis is what those rules of the road will look like. Stablecoin, let's just call it the lowest hanging fruit. It's the most easily understood. For somebody who doesn't understand the digital world or the digital language that's been discussed here today, it's not different than a traveler's check. You would walk into American Express, you would give them $100, they would give you $100 worth of traveler's checks, you could go spend those anywhere around the globe, and they were taken as money. What Circle's doing and other participants are creating a digital representation of that. And when you require that digital representation to be one-to-one dollar backed, you are strengthening the US dollar. When you say your dollar equivalent or the dollar that's in the bank account could be a US Treasury, it could be some other one-to-one asset, it creates a rigor around this technology that says there's something backing this. It's not an algorithm, it's actually a value that we all agree is a dollar. That's going to strengthen the US market. It's going to strengthen the ability for people to participate. And the thing that's so dramatically interesting about cryptocurrency and blockchain and decentralized finance and all the new technologies we're using is it democratizes finance. It allows anyone to participate in these transactions, even if you don't have a bank account, even if you don't have a credit card, even if you are not wealthy. And so for the idea of something as simple as a remittance, where you work hard every day and you want to send money to your parents who live somewhere else around the globe, you can do that instantaneously without having to participate in a bank that may not take your money and may not want you as a customer. So it has
or may charge you onerous
or
fees
charges
to do
you
this.
enormous fees. I mean, if you think about the people who have to go to the post office to send money home or go to these fly-by-night, storefronts, they're going to charge you $10 for every remittance. If you only send $100, that's 10%. That's a lot of money. So they take your money. It's extractive. It's predatory in many instances. And so this allows more people to participate. 30% of the United States is underbanked or unbanked. And so it allows more participation in commerce in a different way. But it needs regulation. So my perspective is I want to provide the oversight and accountability and the transparency to make this competitive worldwide. So when businesses want to be founded and want to have a regulator, they're choosing the US-based system because it's more reliable. It's going to, protect you against scammers or protect you against someone stealing your money or stealing your accounts. But without regulation, you have no safety in those paradigms yet because you don't know who the participant is or what their technology is. With regulation, you can ensure much more reliability.
Are you okay with the regulation? Do you worry about it?
I mean, we have welcomed regulation since inception. As I like to say, we've always walked in through the front door. We've sought to work with, collaborate with policymakers all around the world. We've been the first to be licensed in almost every jurisdiction that we operate. We've been in the halls of Congress for 3 years advocating for payment stablecoin regulation. And I think there's now, as the senator knows, an enormous amount of understanding, or a lot more than there was, on this. And so I actually think this is the potential to be the first piece of bipartisan legislation to be passed in this Congress, frankly. So, and it's thoughtful, it's rigorous, it holds firms, including ours, to strong federal supervisory standards, which are necessary to give confidence in this technology, not just in the United States, but to everyone in the world to depend on this as a digital dollar financial instrument that can power, commercial and financial activity as well. So we're very supportive of the Genius Act, which is the act that Senator Gillibrand has co-sponsored.
Ray, I want to give you a chance to explain why you think the monetary system is breaking down, but more importantly, what would you do if you were in a position of power in the United States? If you were in Treasury Secretary, what could be done to stabilize the role of the dollar, to stabilize the monetary system, which right now is centered around the dollar?
The answer to the first part of your question is that the amount of bonds that are held plus the amount of bonds that have to be sold are greater than the demand for those bonds.
But that isn't true right now. Right now, people are buying the bonds.
No. We're not selling the bonds. We're keeping that. We haven't increased it yet. In the second half of the year, you're going to have to increase it. And as I've been a global macro investor for 50 years, over 50 years, and I've seen this before, and I know the sovereign wealth funds all around. I know them personally. I know there is not going to be an adequate demand. So the answer to your first part of your question is that there's a supply-demand problem.
Right.
Okay. The second question was what can be done about that? I call that the 3% solution. 3% solution means that if you can get the budget deficit down to 3% of GDP.
It's now 6.5.
It'll be 6.5%, 7% right now is the projected number. I can tell you that that quantity will make all the difference in the world. And that can be done, of course, through either spending cuts or taxes, tax revenue, in one way or another. That's been done in 1991 to 1998. That was done, and that magnitude can be done because the third influence, which is more important than the first two that I mentioned, the first two is what everyone thinks about, but the most important is the interest rate. And when you change the interest rate, when you change the supply-demand balance, you change the interest rate. You lower the interest rate without forcing it down, without printing money. And that lower interest rate creates a balance. You're creating a stability. It'll change also psychology around the world. So yes, the answer is the first problem is the supply-demand. The way that it can be changed is to do that. And this has been, the period that we're through is very similar to the 1971 breakdown, which also was very similar to 1933, in March of 1933, same dynamic of a supply-demand problem.
So when you talk about reducing the budget deficit by a combination of presumably tax cuts, tax increases and spending cuts. So DOGE has just announced that they will probably in fiscal 26 achieve $140 billion worth of spending cuts. The Times audited that number, and it came down to $62 billion. That is about 5% of what Elon Musk had promised the DOGE savings would be, $2 trillion. So what it faces us with the reality is that the only way to find real money in spending is in the actual programs, not in the fantasy of waste, fraud, and abuse. So you're going to have to actually cut Social Security or Medicare, or you're going to have to actually raise taxes. Give us your sense of what you would do.
Well, what I would do is sort of irrelevant to the question. What was likely to be done is more relevant to the question, I think. But
what would you urge to be done?
The most important thing to be done is to approach this as a bipartisan pledge for getting to 3%. The way that it looks to me is like we're on a boat that is headed for rocks, and that we have a political system in which almost everybody agrees with what I say. I was just down in Washington, both parties and so on, and everybody agrees that if we don't hit that 3% number, it's like going to be hitting rocks. But everybody's arguing on how. So, and therefore we will probably, knowingly, go into those rocks and hit those rocks while they're arguing on how. So I believe that the most important thing is to take up 3% pledge to be able to do that. Now on how, I hear the different various things. The most likely, there are many, many things, and I don't know if I'm going to digress into them, but
I'll tell you why you can't digress. We have 25 seconds.
Okay, I'll stop there. Probably the biggest one will be Medicaid cuts past a certain level. That will be one, then the cutting and so on. But anyway, we need to do this in a bipartisan way of recognizing that compromise. So I think after 26, there should be a bipartisan committee if we can make it to 26.
If we can make it to 26. With that cheerful note, thank you, ladies and gentlemen.